One. Hi, everyone. Welcome to the latest edition of the ABCs of VSA. My name is Lauren Snedeker. I'm a member of the Trade Guider team. And each Wednesday, we take one concept at a time, and we try and go through it from a beginner standpoint, because that's what I am, a beginner. I also like to break it down into smaller components so that people can understand in a more step-by-step way of how to approach the market from a VSA or Trade Guider methodology and approach. So it's great to see everyone today. I'm glad you're here. I know we had a few webinars today. Hopefully they were all helpful to you. I happened to listen to Philip's earlier, and it was really excellent. For those of you that missed it, it will be available in the VSA Club by tomorrow. Philip Friston is one of our VSA experts, and he does 2 weekly webinars, one by himself, one with Gavin, each week at the VSA Club. Okay, so let's get started. What we're going to do today is talk about some trade setups. And where we get those trade setups is through the indicators of the software that VSA provides. Gavin also has a book, which is called Trading in the Shadow of the Smart Money. And at the end of the book, he ended up producing a supplement to it called the Complete VSA Sequences Explained. And in that, he basically takes 20 signs of weakness and 20 signs of strength, and he shows you how a setup or a sequence can occur. You can get that book for free by emailing me. I will give you my email address at the end. May also be available to you if you just logged in the chat box. And I'm going to show you a little bit of how to use it. At the end of the webinar, Gavin's going to come on and he's going to show you a trade that he took this morning on the CME group, the British pound. He's going to show you the trade setup and what he saw and how he traded it. So stay tuned. We're going to have a great webinar today. So get your pens and paper handy, and we'll start. All right, here's our objectives for the day. First, we want to give you ways to search for trade setups, or sequences as we call them. We also want you to get to read beyond the individual bars, not just looking at one bar, but bars in a sequence and the overall picture that you're seeing. You want to understand the whole picture. You don't want to just look at what you think you see or what you want to see. We'll talk about that in a minute too, as emotions get the better of you sometimes. And you want to be aware or be cautious of the news. So where should we begin today? There's one way that you can begin. You can do a manual search for a chart and start to scan for a trade sequence or setup. You can look at your multi-time frame scanner if you have our software, our standalone RT software. And I'm going to show you how you can scan for indicators as well. So there's 3 ways you can do it. Again, my job is really just to give you a few options. You can take them and use them however you want, just as an additional resource for you. This may or may not work for you, but it's always good to have a few tools in your toolbox. So if we did a manual search, I picked the E-mini today, and I have the 1-hour chart at the moment. And I notice here at the beginning of the day, actually prior to the New York Open, we have massive volume coming in. Okay, bar A, bar B, and bar C are all the same indicator, and the indicator is supply coming in. I'm going to explain what supply coming in is in just a minute. What I want to show you first is the way you do a manual search is you start off with one chart, okay, and you want to determine the overall trend. Am I up? Am I down? Am I sideways? You're going to click on the indicators so you know what the indicator is. Okay? You're going to read the dialog boxes. See if the signal is confirmed by the next bar. This signal appears, the next bar after it. This signal appears, the next bar after it. This signal appears, the next bar after it. Okay? You want to look at all of this. So here's your checklist for a manual search. And this may seem pretty obvious to some of you, but believe me, with beginner traders, nothing is obvious. I don't take anything for granted, and sometimes when we do, we can miss very small things. So let's try not to miss the little things, and that way we can be more successful and more consistent. So you want to determine the overall trend. You're looking for signs of strength in a downtrend and signs of weakness in an uptrend. Again, you click on the indicators. They'll tell you what the indicator is. It'll give you a description of the box. The dialog box will give you a description of the indicator. It'll tell you what you need to look for in the background, what the next bar needs to be doing, up or down. And it'll also tell you what to look for in the future. Where are you in the sequence? Where are you in the overall trend? Where are you in the overall trade setup? What's going on when this bar appears? Again, no man is an island, no bar is an island. You need to look at the bars around it, behind it, in front of it, and the overall picture. Again, we're going to talk about the rule of three, confirming time frames, 3 or more time frames, 3 or more diamonds. You also want to scan the sequence setup guide to find a possible setup. Now, that refers to the book that I was just talking to you about, The Complete VSA Sequences Explained, which you can email me and I will give you a free copy if you don't already have it. It starts on page 16 of the PDF, and I gave you just an example. When I showed you the chart 2 slides ago, what I had was supply coming in more than once. So I scanned and I looked on page 16 and I found sequence 2. Supply coming in, no demand. So there's something I can keep in the back of my mind as I'm trying to look for trade setups. Just to repeat, a couple of people had a couple questions. What I'm referring to is Gavin's ebook, electronic book called The Complete VSA Sequences Explained. It's absolutely free. You just need to email me and I will give it to you. I'm just explaining to everyone how I use that pamphlet or how I use that supplement. Page 16 of the PDF is where the sequence starts. It's just a chart. It lists 10 signs of weakness and 10 signs of strength. And on page 16 is where I found this sequence 2. Supply coming in, no demand. Now at this point, when I'm at the chart, what I've seen is supply coming in, supply coming in, supply coming in. And basically, I am looking for to see if maybe this sequence might actually help. I'm not sure because I can't predict the future, but that's what I'm trying to keep my eye on, and that's what I'm looking for. A couple people have asked for my email. I did put it in already, so it should be in your chat box because I sent it out to the entire audience. I'll give it to you one more time. It's also at the end of the presentation as well. It's just my first name and my last initial at tradeguider.com. And again, you're welcome to have it for free. And again, it's called The Complete VSA Sequences Explained. It's a supplement to the main book that we wrote, that Gavin wrote and released in May. Okay? And Jacopo asks an excellent question. Thank you so much. I was just about to explain that as well, and you set me up perfectly, so thank you. Jacopo asks, Lauren, when you look at a sequence, do the signal numbers have to match exactly? And the answer is no. What you'll notice with most of these sequences is that 9 out of the 10 setups have no demand as the final sequence. It doesn't mean that you're only going to see no demand once. What it means is that you may see it more than once. And so what you're looking for is the actual dialog box, and you're looking for the description. The description on, in this case, sign of weakness 26 and sign of weakness 7, it's the exact same dialog box. The reason why it has a different number is simply for the programming of the computer. The computer runs to the computer runs on an algorithm. And what the algorithm does is it's constantly checking when a bar populates what the volume of the bar is, what the range of the price bar is, and where it closes. Okay? It's configuring that. So sometimes when it comes in, the exact same description, supply coming in, is identical. It's just for purposes of computer programming, the number might be different. So please don't let this confuse you if you think that you need to have no demand 198 versus 146. Sometimes it's where the no demand is. Sometimes it might be slightly different volume. It's just how the algorithm measures it. So again, don't get caught up with the numbers. Those numbers are for us, for the computer programming, for the algorithm, okay? The actual term and the actual description is what's most important, okay? And what we're talking about right now is not trying to analyze the chart. What we're talking about is how to approach any chart. I happen to have used the E-mini 1-hour chart when I started this, and I'm going to show it to you again in just a moment. But really what I'm talking about is just how to approach any chart when you start a manual search. What you're doing is you're searching for a chart and you're searching for a potential trade setup, okay? And to anyone that asked, yes, it is being recorded, and we will be posting it on YouTube sometime tomorrow. We have our own YouTube channel. It's just youtube.com/TradeGuider. Again, it should be in your chat box. I did email it to the entire audience, and you can always email me, and I'd be happy to send that to you as well. All right, so this is one way that you can use the sequence setup guide. Again, where you find these sequences is in a free book that Gavin wrote called The Complete VSA Sequences Explained. You can email me. You can get it for free. It's an electronic copy. One thing I want to caution you about. When he wrote that supplement, he was giving you an overall guideline. Again, you have to allow a little bit of the nuance. It's not going to be exact. What you're looking for is what this overall picture is telling you. And in this sequence, supply coming in is telling you that you're at the start of a distribution phase, you're at the start of a climactic action. And ultimately what you're looking for, and we've talked about this before, is for it to come basically mushroom up and come back down. All right? Jane, we're not ready to see the chart. We're not analyzing anything. We're actually just trying to explain it as a theory first. I'm going to explain it bit by bit when we get there. Okay? So what this is basically telling you is supplies coming in, and we're looking for no demand. Again, what you'll notice on most of these sequence charts on page 16 through 19 in the book is no demand is usually the last part of the sequence. I think 9 out of the 10, it's the last part of the sequence. And what that's telling you is there's finally no demand at the end of the road. We just need to be patient and look for that. Okay, so again, this is just the beginning to try and understand the theory, and then in a minute we're going to put that into practice. Okay, so one of the things that you want to do once you've done your manual search is you want to see if smaller time frames have the same signals. So we found on the 1-hour chart that we had supply coming in 3 times. Now I'm in the 30-minute chart at the same time frame. And I see A, B, C, D, and E are actually all the same thing. They're actually all supply coming in. Now that should give you a moment to pause. That should make you go, all right, I have it in my 1-hour chart, and I now have it in my 30-minute chart. Let's say you started on your 30-minute chart, Lauren. Okay, no problem. I just click on these indicators. I get my dialog boxes. And I have supply coming in, supply coming in, supply coming in, supply coming in. Now, if I go back to sequence 2, that's something that I might be on the lookout for. Okay, you might be on the lookout for no demand. I'm looking to see that further down the road to possibly give me a confirmation. But we're not sure yet. This is all we see right now. This is all we can judge right now. Okay? So now here's the rule of 3. We have 3 time frames. We have a 1-hour, which is what I just showed you. This is no supply coming in, supply coming in, supply coming in. Here's our 30-minute, supply coming in, supply coming in, supply coming in, supply coming in, supply coming in. I guess I could say that 8 times fast. And then in our 15-minute time frame. So what we have is we have 3 or more green diamonds confirming an uptrend in 3 or more time frames. So I have an uptrend here, an uptrend here, and an uptrend here. This means that the overall trend is up. If you can just hit yes, so I understand you know what I mean by the rule of 3. Again, 3 or more diamonds in the same color confirms one trend. And then when you have it in 3 or more time frames, you're in an overall trend. So there's the trend and there's the overall trend. Great. Okay. I want to make sure everyone is on the same page as me. That way we're good. Okay, great. So another way you can scan for trade setups is you can create a watch list. Now, it's watch list right here. I have one that I call an E-mini watch list. Darshak asked me, is there a reason you pick those time frames as opposed to the 1-minute, 5-minute, and 4-hour? Yes. Actually, one of the reasons why I always start with the 1-hour is because it gives me a very good picture of what happened at the end of the day yesterday and what happened today. also what happened in the European market versus what happened this morning in the American market. And then 1 hour, I half it, so it's my 30-minute, what's going on, and then I half it again, which is 15-minute. There's no absolute reason why you do that, but when you have a 1 hour and a 30-minute, it gives you a much stronger signal and a much stronger overall picture, and when you have smaller time frames to confirm it, then you know that you're reading the right thing. Oftentimes the 1 minute, 5 minute can be very noisy and it can go up, it can go down, it can go sideways. So you need a little bit of a larger time frame first to understand what you're looking at. But you can certainly go in at a lower time frame to do your trade entry. Especially if you're scanning too, you want to use a little bit of a larger time frame to start. So you can create a watch list. This is again in our real-time trading platform. I have an E-mini watch list, and when I highlight it, which you can see the blue, I have a 1 minute, 3, 5, 9, 15, 30, and 1 hour, okay? And if you notice here, you can create a watch list for either one symbol or more symbols. Let's say you wanted to have gold and silver under one. Let's say you wanted to have all of your spot Forex under one. Let's say you wanted to have all the things that are traded on one particular index. You could do that. You could have all your ETFs, however you want. Remember, it's the way your brain works and the way you like to organize information. Mustafa asks, if you're using the end of day, which time frame would you use? So you would use the daily time frame, and then you would try and use a larger time frame to confirm. So in your case, a weekly time frame would give you an overall trend, and then the day by day would help you confirm what you're trending towards. Okay, so you can create a watch list with one or more symbols, and you can put many time frames into your watch list. That's what's so nice about it. Okay, you can hover over these just like this. You take your cursor and you hover over it, and it'll tell you what the indicators are. The nice thing about this is not only do you confirm, oh, I'm in a green trend, I'm in an uptrend in my 1 hour, an uptrend in my 30, an uptrend in my 15. I've gone sideways, I'm starting an uptrend in my 9 minute. Oh, I'm sideways in my 5 minute, but I'm an uptrend in a 3 and a downtrend in a 1, right? One quick glance, you can see that. You can also hover right over it, and you can find out if, let's say, if we had gone a little bit back, you would see no supply coming in, and you'd see it all through the 3 charts. So all of a sudden, in a quick way, without doing it manually, you can actually see repeat indicators. It's just another way to do it. If you're using our plugins, one of the things that I really like about some of the trading platforms, not all of them have it, you can either do it manually where you go chart by chart to confirm what you're seeing. Some of the trading platforms allow you to tile your charts, so you could put 4 charts up and quickly scan a larger time, 2 larger time frames, or 2 smaller time frames than what you're in, etc. So there's a couple ways to do it, and the reason why I'm doing it this way is because it applies for both our plugins and our real-time platform. But just to be specific about this particular scanner is only the trading platform that we own, okay? So this is a fast way to confirm your overall trend. Remember, one trend, okay, I'm in an uptrend. Overall trend, 3 or more of the same color diamonds in 3 or more time frames. Okay. All right. Here's something else which you may or may not have seen. This is an indicator scan. Okay. And what I did is I basically went under Scanner as my as the drop-down menu, and then it says Indicator Scan, and it just walks you through like anything you would see, like a setup wizard that you would see if you were installing a new software where it asks you questions and you keep hitting next. It's the same thing. It's very simple. And I basically set up all of my time frames. This is the 1 hour going all the way down to the 1 minute. And I basically asked for it to scan all of the things in my watch list. Now, this is really good because you can quickly scan and see what do I have. This white bar would be, it's not populated yet. This would be your most recent price bar, and then you go back. So 3 bars before your most recent, there's an indicator. You can also notice there's more red here. There's red throughout the 30-minute. Here's my 15-minute. Here's my 9, etc. Okay? Page up, page down if you had more. I obviously only have 7, but you could page up, page down if you wanted to enter many, many more. Okay? And this is a great way to do it if you're trying to scan quickly for basically trade setups or clusters that you're looking for of similar similar indicators. And one thing with a screenshot that I can't show you is if you click on it right like this, it'll go immediately to that, that chart, and you can kind of scour through and see where the weaknesses appear. So as soon as you click on this, it'll go to the 1 hour chart. As soon as you click on this, it'll go to the 15-minute chart. So it's very easy and very quick, and you can save them. I went back in to try and edit it, and it actually said, do you want to open up a previously saved one? Very, very simple. If you have further questions, please feel free to call me or email me. But it really is simple. You just go to the top, go to Scanners, drop-down menu says Indicator Scanners, and it'll just walk you right through. Okay? So those are 3 ways that you could scan. You could do a manual scan, you could do your watch list with your time frame scanner using the rule of 3, and you could do this indicator scanner. So why an indicator scanner? You can choose for a symbol or a watch list. You can choose the number of bars. Oh yeah, that's right. I chose 30 bars. I'll show you again. This was 30 bars. So you could do more than that. You can quickly check out what the signals are across all time frames. I actually like this too on stocks or instruments that I'm not trading at the moment. If there's something I'm keeping an eye on but I'm not yet ready to trade, you can do that. Jacopo asks, can you scan for sequences? Yes and no. What this indicator will do is it'll tell you what you're looking for, and then if you see this, like for example, I see this right here, I want to go to that chart and I want to see what's going on. Okay? Now one thing I notice in the 1 hour chart right here, just looking at it, it seems like every time I get a sign of weakness, I get some sort of test afterwards. See a sign of weakness and I get a test. So that's something to be cautious about, and actually Gavin's going to talk to you about that at the end of the day. So it's just one more ability, one more tool that you can do. Again, you don't have to do it. It's just something that you can choose to do if you'd like to. It can be helpful. I find it helpful, again, for things that I'm not actually trading on right at that moment, or it helps me set up my day as well. It takes about 2 seconds depending on how many charts you have. So let's go back to the 1 hour chart again, which we had originally looked at about 10 minutes ago. And the 1 hour chart, it's from today. This was at 4 o'clock in the morning my time, so of course this is the start of the American market. A, B, and C is all supply coming in. They're all the same. Okay? And I'm going to explain what that means. So supply coming in, it's an up bar. It closes on the high. What do you mean, Lauren, it closes on the high? Well, this is what I mean. See, it closes up near the high. High, high, high. Okay? Up bar, up bar, up bar. High volume means selling is present. If it's ultra high volume, it means it's a climactic action or start of the distribution and selling phase. Let me go back. If you don't know, when you click on it, it'll tell you right down here. Okay, volume low, spread very narrow, close low, bar down. Okay, so if you click on this bar, it'll populate and it'll give you the information. So if you're like, well, I'm not sure what the spread is, I'm not sure if it's high or ultra high, it'll tell you. So please don't worry about that. And even if you have the plugins, it'll tell you that as well. Okay, so if you have high volume, it means selling's present. Because remember, smart money sells into a rising market. They want to sell high and buy low. Let them do it, and you follow the trend. Let them create the campaign or the cause, like we talked about 2 weeks ago, and you get to trade the effect. Okay? So the distribution phase is the selling phase by the professional money. When it's ultra high volume, okay, it's climactic action. So here, massive spread up bar, ultra high volume, and I get even higher volume than the previous 2, meaning that they're still selling into this rising market. Okay? Supply coming in, supply coming in, supply coming in. Supply coming in is also an excellent sign of the selling. It's a great start-off point for a distribution phase. It's a very, very, very good sign that you're in an uptrend, that you're at the start of a selling phase, that you're looking for signs of weakness. Okay? Now, when I read the dialog box, this is what all of this has. It also asks me in the background, if I have signs of weakness, it's a stronger signal. I do. I have signs of weakness here and here. Background, for everyone that knows, just means to the left. What's behind you? Background. Okay? All right. Now, in the future, it says look for future signs of weakness, such as up thrusts or no demand. So now at the moment, this is what I put in my brain, and I say, okay, maybe I need to look for that. Let me be aware of that. Let me think about what I'm looking for. Okay? And here's the 30-minute. Remember that I told you that I have the same signal in a lower time frame. Not only am I in an overall uptrend, this is now the second time frame, 3 or more green diamonds. I've confirmed my uptrend. All of these say supply coming in. Now, what that really should tell you is, whoa, something major is going on. If you know that typically supply coming in means that it's the start of a selling, then you should also know that if you keep seeing it, that something's really, really going on, and it's usually on good news, and it's usually triggered by something, okay? So keep that in the back of your mind. Now, this is the end of the day yesterday, and this is the start of the day today. Notice that this is before the market opened, okay? The American market, excuse me. So again, check for the why. If you see ultra-high volume, if you see massive widespread bars, something triggered that activity, okay? Look. What I mean by massive widespread is right here, okay? It appears in both the 1 hour and the 30-minute, and I'm sure if you looked at the other ones, it would appear again. What do you suppose is the why in this case? Can anyone tell me what would have triggered that activity? I'm sure if you think about it for a second, you can figure this one out. We talk about it all the time. Yep, Jack's got it. Edward's got it. Ron, Al, Jerry, Troy. Steve's got it. Not quite, Peter. Peter puts helicopter Ben dropping money. Okay, so basically what it is a news event, okay? The stocks stage a huge rally. Investors around the world cheered and raced to scoop up stocks Wednesday after the Fed said that it will act with other central banks to boost liquidity and support the global economy. So they basically devalued the dollar against all of the currencies to try and help. This is a major news event, and you would expect things to go up. If we go back again, it's up. Okay, it's a major news event, and it happened. They made the announcement at 7 o'clock in the morning. Now, if you were smart, you could have gone on to forexfactory.com, and you would have known that there would have been a banking announcement this morning at 7 a.m. Central Time. Okay? So here's the why. All right, let's look at the E-mini 15 minutes. We do have 3 or more green diamonds confirming an uptrend. Now we're in our third time frame confirming our overall trend. Okay? We have a massive up spread wide bar at 7 in the morning Central Time, so we now know the why behind that. There's our supply coming in. That shouldn't surprise you. And we have a very curious B and C and D, and I'm going to explain these in detail for you. I'm going to go bar by bar for you just to give you, but let's just look at the overall right now, okay? What you see is a major news event, okay? A major widespread up bar closing up near the high, a lot of volume, okay? It starts to go up, it starts to go down, and never breaches this close. When it finally does, it comes down, it goes back up again and closes up higher. So it never really breaches this close at all, okay? This is the close of the bar. Here we have an up bar, closes up near the high, and the next bar closes down. Then we go up a little bit, and we drift up. And then we have a bar, it doesn't penetrate this one, and it closes down. And there's a signal on it. And we have pretty high volume, okay? Looks about even. It's slightly up bar, that's why it's red. I mean, slightly down bar, that's why it's red. And then it goes up again. We have here, again, we're still in an uptrend, but we're on lower volume. I can tell you right now without ever clicking on that that's a no demand because it's pink. Pink is lower volume previous and the prior to. This is lower volume prior to, and this is lower volume, okay? Now, what you would normally expect in this case is that it would drift a little bit because you're in an uptrend, and I see some white diamonds, okay? I would want more confirmation that I can go short, okay? But this looks like a pretty strong sequence. But again, I can't predict the future, and I'm not sure yet, okay? And remember, you need to be patient. Okay, so we have supply coming in. This is called the end of a rising market. Bar C is a reversal after an effort to rise, and D is a no demand. Okay, and I'm going to explain them one by one, so don't worry. All right, here's bar A. It is an up bar. It closes on the high. Ultra high volume, which equals the distribution or selling phase. Okay, and I know it's ultra high volume because I clicked on this, and my little trusty volume reader told me that it was ultra high volume. None of this needs to be guessed. You can actually just click on it and you'll know. In the background, I have two signs of weakness. Number one is supply coming in. Number two is a no demand. Okay, so I have two signs of weakness behind this. This is straight off the dialog box. The future tells me to look for more signs of weakness to confirm. So the next bar is up. The weakness is not confirmed. All right, the next bar is up. So I need to look for it to whipsaw or to continue to rise, literally straight from the dialog box. So what they're trying to say to us is, okay, looky here. You have this big, massive news event. You have this very widespread up bar. You have weakness behind you. Okay, this could be the start of the distribution or the selling phase. If it's a massive widespread, this could be climactic action. Climactic action is the start of a campaign, a start of a cause by a professional money, and you need to pay attention to it, but you just don't know exactly when they're ready to completely sell off. So we watch the volume, we watch to see how much selling is left to do, we watch to see when it drops off, usually on no demand, in a downtrend. Right now, all we have is this. We have the start. No supply, supply coming in is a great start. Okay? So if we just analyze this one bar at the beginning of the day, this is all we have to go by. We don't have any other information right now. Okay? So I need to know that I'm going to look for it to whipsaw or continue to rise. So we're not going to short here. That wouldn't make any sense. Plus, we're in an uptrend, and we try not to short an uptrend. We try and trade with the trend, trade in harmony with the trend. Remember that? The trend is your friend. Okay, again, supply coming in. Up bar, high close, ultra high volume is climactic action, the start of the distribution or selling phase. The background, if I have signs of weakness, which I do, is a stronger signal. And in the future, I'm looking for up thrusts or no demand. Okay? That's something that I would typically look to see. That's what the dialog box also suggests that you would be looking to see. Okay? Bar B is the end of a rising market. Now, this is very, very interesting. It's a very strong indicator. This is on the 15-minute time frame. But you need to read carefully, guys, and you need to make sure that just because you see this, because I got excited when I saw this immediately. I went, ooh, 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 end of a rising market. Oh, my God, I'm ready to short. I'm ready. I got my trigger ready. I have to read very carefully, and I have to look very carefully at what's around me. Okay? End of a rising market is an up bar. An up bar is something that closes, this bar closes higher than the bar behind it. It is a narrow spread. If you're not sure, if you can't determine if that's narrow or wide, again, just click on it, and it'll tell you. Okay? I have high volume. Again, if you're not sure, click on the bar, and you'll find out. And also, it closes off the high. Notice that it's up near the high. Okay? That's the description of it. I am into fresh new high ground, and I put look carefully. I actually, when I had this, I went back 100 bars. I am into fresh new high ground. Okay? That makes this a pretty strong signal. I've confirmed that piece of it. In the background, literally it says in the dialog box, not that many times, but I'm emphasizing it, you must have a substantial up move behind you. Now I'm identifying that up move behind you as the supply coming in. Okay? It's also on a news event. The news will be good. This is when an end of a rising market usually occurs. People get really excited on good news, and they start to buy because they think the market's going to continue to rise, and this is when the professionals start selling. Notice the higher volume. Okay? So the algorithm trips, and this is what appears. Okay? Again, we don't have the whole story. What we do know in the 30-minute and the 1 hour is we have supply coming in, supply coming in, supply coming in. Okay? That would make me caution against end of a rising market. Because if you literally just read the title, end of a rising market, that means that an uptrend is about to end. Now, I know you can read, and I'm not being pedantic here, but what I'm trying to say is you literally see end of a rising market and you go, woohoo! But what you need to understand is what's going on in the larger time frame. They're not done selling in the larger time frame. Okay? So you have to be careful. Okay? All of these things are true. This is what I have right now to confirm. All right? End of a rising market. What it says in the box is that you expect to see declining prices. Okay, duh. End of a rising market. When does it end? Now, it says right in the box, you have to be cautious or you have to be aware. I have to be aware of down bars. Look, here's a down bar. with high volume. Here's high volume, closing on the low, oops, closing on the low, and the next bar's up. Yikes, I do have that, because that shows potential strength. Right then and there, it's basically said the end of the rising market is not done rising. Okay, so I have that. What it says is it says expect future testing. Testing just means test to see how much supply is left, test to see how much is left to sell before they're ready to bring it down. Okay, so this literally says it right in the dialog box, and I have that. I confirm that, and I went, ooh, all right, I have the end of a rising market. I have this behind me. I'm in an uptrend. My 2 higher time frames are in an uptrend, and this is what I have. I need to be careful. So again, you're not going to short right now. Not to mention you shouldn't short in an uptrend. This is what it does say. This weakness will not suddenly disappear. It's just a waiting period. Okay? It doesn't mean that it was a trick. It doesn't mean that it was a bug. It doesn't mean that it was a wrong signal or a false signal. What it means is at the moment that it populates, that's what it read. And then it says, because these bars populate at the moment the bar is there, it'll tell you, be careful if these things happen because it's not yet ready to go down. Okay? So I'm reading this, and I say to myself, I might have sequence number 5. Again, this is from Gavin's book, The Complete VSA Sequences Explained. You can absolutely have it for free. You just need to email me. I'll give you my email address at the end. Okay? Sequence 5 says, end of a rising market, up thrust, no demand. Okay? So I think to myself, all right, I got weakness behind me with my supply coming in. I'm on good news. I have the end of a rising market. It just told me that it's not yet ready to go down. So maybe I might have sequence 5. So I'm going to look for an up thrust, which is pushing up into a new high, higher than the bar behind it, and closing on the low. It essentially is your left hand making an L. That's something I might want to look for. And then a no demand, basically saying they're no longer interested in higher prices. So we're just wondering if maybe we might see this. This is how we're thinking about scanning for sequences, okay? Again, I have weakness behind me. I have good news. The 30 and the 1 minute confirms the trend. And this is a sign of weakness, okay? It confirms my overall trend, and it confirms the weakness that I'm seeing. But we're just not yet ready to collapse. But it's a good sign that this might be a sequence coming up, okay? Okay, now here was bar A, supply coming in. Here was bar B, end of a rising market. Here's bar C, reversal after effort to rise. This is very interesting. I saw it twice today in the e-mini as I scanned. Okay, it's based on the action of 2 bars. So it's bar C and the bar before it. This first bar closes up. It's an up bar, and it closes high. The second bar closes low. Now watch. Notice how it takes out everything that this tried to gain. See how it closes much lower than this low and closes lower than the lowest of the bar. Okay, it's literally gone up and takes out everything that this just tried to do. So it's basically reversal after an effort to rise. Literally, it tried to rise, it's into new fresh ground, and it reversed itself. It failed. Okay? It's also sometimes known as a top reversal. Kind of makes sense. Reversal after effort to rise, a top reversal. Okay, it is a strong signal because the volume on the first bar right here is higher than this bar. And you can tell it's higher even just eyeballing it because it's pink. When it's pink, again, it's lower than the volume of the previous 2. If you're not sure, click on it. The first bar is into fresh new high ground, yes. The high of the second bar, meaning this very top, is higher than the close of the first bar. It's just higher than this close of the first bar. So that's all confirmed. In the background, I have signs of weakness at B and A. All right, so we're looking pretty good. We're still confirming. Okay? Essentially, there has been an effort to rise with the increased volume here in the first bar. But with the next bar down, it shows supplier selling has disappeared. I hope that makes sense. They're trying to put it up, and then this bar takes out all the effort that they attempted to put up here on lower volume. If it was really low volume, it would be much better. Okay? But what it's showing is that the interest in the higher prices is starting to wane. They're not as interested in higher prices. They might be done selling. Okay, and it says look for a no demand. Now, in bar D, I have my no demand. So that's looking pretty good. They're telling me to look for a no demand. They're telling me to look for no demand. They're telling me to look for no demand. Okay? No demand. Okay, bar D, we have a narrow spread. We have a higher close. The lower volume than the previous 2 bars. That's why it's in pink. This is lower, and this is lower. Pink, 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 pink. That's pretty good. I have weakness in the background. C, B, A, behind me. Woohoo! Here's the only thing. I'm in an uptrend, which means it's a pause or a small decline. It literally says it in the dialog box. If you're in an uptrend on a no demand, you do not short it. It just means that they're almost there, but they're not quite there yet. Okay? You have to wait for it to mushroom over and for it to come back down. When you're in a downtrend, that's when you can see this. Now, if I was in my 1 hour or my 30-minute and on a no demand, it had started to turn white, and in my 15 minutes I was already in the red, that would be your confirmation. But right now in a 15-minute and a very strong uptrend with a 30-minute and a 1 hour time frame also in an uptrend, this is not where you short. This is where you realize they're still not done. Also keep in mind, guys, the overall picture. This is really, really good news, what they did at 7 this morning Central Time. So the momentum of bar A is carrying you all the way through. So this means that this momentum, just like in football, is so strong that they're not quite done. There's both buying and selling. People are getting excited. The overall trend is up. We're already halfway through the day, and the overall trend is up. You need to understand that that's also there. Okay? Why you hate to wait? You're trending on what you want to happen. You hear good news. You've been listening to Gavin. You've been listening to me. You've been listening to all of us say, beware of the news. When you see good news, you got to watch, because this is when you're going to see signs of weakness, because everyone wants to go along on good news, and this is a great opportunity for the smart money to start selling to all the herd, and that's absolutely true. It just sometimes takes a little longer than you hope. You get emotionally involved. It's exciting to see so much volume. If you had looked at the 3 and 5 minute chart, there was a lot of volume. It's great news. Woohoo, great news. I'm ready to short. I'm ready to short. I'm ready to short. Believe me, people were looking to short all day. They were trying to pick market tops, and they were shorting as soon as they saw it. Okay? This is why you need to wait. You're in an uptrend. You want to trade in harmony with the trend. All your diamonds are green in your 15-minute, your 30-minute, and your 1 hour. There's testing within 5 bars after the sign of weakness, then that means that they're not quite ready to bring it down. What they're doing is the no demand, it goes up and it fails a little bit, and the volume's lower. If all of a sudden you start to see testing, like a sign of strength, you basically know that they're testing for more supply, and it's going to keep going up. Throughout the entire day, despite the fact that we saw signs of weakness, we kept seeing it go up and up and up. And this is the part that absolutely drives people batty, because they're so impatient and they want to short this. This actually would have been an excellent day to go long. Now, we can probably see that it's probably going to be a weak market tomorrow because of everything that's happened today. But remember, the momentum of that news this morning was so strong that it carried us up. So it's not enough to just look at an individual bar, but to understand the whole picture and to understand what's going on. Here's another thing. When we were in the 15-minute time frame, the smaller time frames never turned red, 3 or 5 minute. If they turned red for 3 bars. So I wasn't getting a confirmation below the 15-minute for me to enter my trade. Troy asked me, what time do you make your entries? I typically use the 1 hour to give me my overall, a 30-minute to help me confirm, a 15-minute to confirm, and then I might go in at a 3 or a 5 minute. But the 15-minute is usually where I use my guide, and I'm not getting anything to tell me that it's turning over. So it never turned. I'm seeing signs of weakness, signs of weakness, signs of weakness. I'm starting to see trade sequences and setups, but I'm getting testing within 5 bars after my sign of weakness, so it's not yet ready. You got to watch the volume. You got to understand that the momentum of this really good news is strong enough to carry it all day. And essentially, it was up all day across all the time frames. Remember, guys, the trend is your friend. It sounds corny, but corny works. That's why advertising has always made their money on short and sweet and easy. I don't know if you guys remember a cereal called Life Cereal, and it was this little boy. It was, I don't know, 70s, early 80s, and he just sat there and he ate. He made the most terrible noise. Yep, Scott knows who he is. And he just kind of, while he ate. And all you do is just see this little kid eating cereal. And the camera person goes, hey, Mikey, do you like it? And he says nothing, and he just keeps eating it. That was it. So Mikey liked it, and everyone bought Life cereal, including my mother. I grew up on it, and it was pretty good. But it's very simple. So if you can remember very simple things, the trend is your friend, the rule of 3, then this won't make you go wrong, okay? Because I know you're going to say, but Lauren, I saw all these signs and sequences just like Gavin told me. Right, except we're still in an uptrend. We're still in an uptrend. We're still in an uptrend. So you have to trade the trend, guys. Okay, here's your caution tape. Be a trend trader. Be cautious of trading the news. Again, if the momentum is strong enough, it can carry throughout the whole day. The sequences are there to build a case for you, absolutely, to help you scan, to help you look for it, to help you understand a picture and how the pieces fit together, such as supply coming in shows the start of a selling or distribution phase. Okay? But they're analyzing the market. They're not telling you to buy or sell. They're analyzing the market. The algorithm appears based on the volume that it sees, the spread of the bar, the close of the bar, and the relationship around it. So all those things are true. Just like the end of a rising market, it's absolutely true. You just need to make sure that everything else is still fully confirmed. So you have to be patient and wait to see what is there, not what you want to be there. And I have to raise my hand to myself in the middle of a room by myself that I am definitely one of those people. Type yes if sometimes you trade what you want to be there and not what is there. See, we're all the same. It's human nature, right? We always do that. Well, I just know. I just know. And trust me, when I saw the end of the rising market today, I went, woohoo, absolutely. And then I started looking, and I started looking, and I started looking, and I was like, oh my goodness, I still haven't found a no demand on a downtrend. I didn't see it. I kept seeing it in an uptrend. I'm like, okay, where are we? So Jay asked, you mentioned that it would have been a good day to go long. When is it in the morning or the afternoon? Actually, that's a really good question. We're going to show you, Gavin's going to show you a trade setup where you could have gone long, Jay, is any time that you kept seeing the supply getting tested. Because once it gets tested, you want to look for, and we saw it twice today where we saw no supply after all this sign of weakness. It's basically one more test before it goes up again. You could have gone in right after that. That's a pretty strong one. Because when you see a test in a rising market like that, a no supplier test in an uptrend on a big volume day like this, that would have been a very good one. The hard thing about trying to teach that is that there isn't a sequence to build around it. That's a perfect example of, okay, this is what I'm seeing. I'm building my sequence, but I keep seeing this pesky test in there. Why do I keep seeing a no supply? I literally asked myself that. And Gavin and I were talking about it, and it's basically testing the supply. Nope, not there yet. Nope, nope, there's still a lot of people buying. There's still a lot of people. I talked to a broker today, and he was saying to me, you know, I had a crappy day today. I said, why? He's like, because all of my customers kept shorting. They kept trying to pick market tops, and they kept shorting the E-mini all day. And I said, well, the volume is too big to short. And he goes, yeah, they don't listen, and now I'm broke. So we kind of had a good laugh. So truly, truly, you want to wait to see what is there and not what you want to be there. Okay? Lastly, I did an indicator scan at the end of the day. Again, if this was something that I decided that I didn't want to trade, and I realized, wow, you know what, the momentum is way too strong. I think I need to hold back and watch. I'm still not seeing what I'm looking for. Then you scan, and again, this is hourly all the way down to 1 minute. Unfortunately, it doesn't show the times here. That's just the way the scan works. I can tell. Look at all the weakness at the end. Weakness, 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 weakness. The end of the day, almost all finished out, supply coming in, supply coming in, supply coming in. So what that tells me is that the overall trend today was up. There was a lot of volume and a lot of momentum to carry you through the whole day. It wasn't yet ready. They're not yet ready to sell. There was still a lot of people that were realizing, oh, crap, I shorted all day. I did something wrong. You know what? I might as well buy and go in at the end. There's a lot of volume at 3 o'clock today. 4 o'clock, 3 o'clock Eastern, 4 o'clock at the end of the market. Basically, they were trying to position themselves to go long because they realized that they had kind of screwed up all day. So you see this widespread up bar, which could be the start of distribution. My feeling is that it's both buyers and sellers that are there at the end trying to position themselves or trying to liquidate. So you got to be a little cautious. Let's see what happens tomorrow morning. The good thing is that Gavin and Steve Phillips are going to be doing a webinar tomorrow morning beginning at 7:45, I believe, a.m. Central Time or 8:45 Eastern Time. And one of them that they always look at is the E-mini. So based on what we're talking about today, now that you know better and try not to get emotionally involved, let's see how it turns out tomorrow. Okay, so here's some cyber specials. For those of you that know about Black Friday and Small Business Saturday, there was also cyber sales starting on Monday. So we don't want to miss out on that boat either. There is the cyber special. We had so much demand for it. We got so many phone calls for it that we're going to continue that you can own, not lease, the Trade Guider platform, which is the one I showed you today for $999.95, which is 50% off. You don't lease it, you own it. This is the URL that you can go to or the link that you can buy from. Or you can own the Trade Guider end of day for $499.95. Okay, and that's the link. You get Trading in the Shadow of the Smart Money, which is a 175-page book. You also get the Chart Reading Masterclass, which is an excellent audio-video learning. It has PowerPoint presentations. It has the ability to stop and start. You can watch it online. You can download it. It gives you 8 signs of strength and 8 signs of weakness. There's also a 107-page PDF that you can print out. You also get a Getting Started course that walks you through the software. And you also get a free upgrade to version 5 when it comes out. Someone asked, what's the difference between the RT and the end of day? End of day is mainly for stocks, and it gives you daily time frames and higher. RT, real time, will give you 1 minute all the way up to weekly charts. So you can get more than just the daily, weekly, monthly charts. End of day is just daily time frames or higher. Okay? You get the upgrade to version 5. Right now we're at version 4, so you get a free upgrade to version 5. This is how you can reach me. This is my direct number. If you want to call toll-free inside the United States and Canada, you can do that, 855-T-Guider. You can email me both for the PowerPoint presentation, for the special. If you have any questions, if you want to call me about anything else, I'm available. You can email me. Here's my Skype, all lowercase, Lauren13Sned. I have a Facebook and Twitter page, Lauren Snedeker. I often post my webinars on there. Starting to use Twitter a little bit more to try and show you some trade setups or sequences. It's one of the things that we're planning on working on. It's a little bit hard to constantly keep up with Twitter, but I'm trying really hard. So you can definitely keep up with that. Without further ado, I'm going to give you Gavin. He's going to show you trade setup that he took, trade that he took today in the CME group. He shorted the British pound, and he is going to show you how to do that. All right. So I'm going to thank all of you for your time and your patience. You're absolutely great. For those of you that asked, version 5 is coming out sometime in first quarter 2012. Thanks, everyone. I'm giving you to Gavin.
Okay, thanks, Lauren. Round of applause, please, for Lauren Snedeker. Another fine job. And very interesting point that I just want to highlight before I show you the charts. Interestingly, today, I actually took a short trade. Let me just ask, how many of you were in the seminar that I did this morning with PFG and the CME group? How many of you were actually in that? Just want to see how many of you saw me take that trade. I was short the pound. Just want to see how many of you saw that. Okay, majority of you were there. Okay, good. Okay, yeah, and you probably saw, yeah, a couple of you actually took the trade as well, and I'll show you what happened. Now, we were trading, basically, I was looking at the E-mini this morning after the move, and I did not want to short the E-mini. I was not at all confident that that market was going to come off, even though there was a lot of volume there, because what we were seeing is after every sign of weakness that was appearing on a 3-minute chart, 3 bars later, and it was usually within 3 or 4 bars, we were seeing no supply. That's actually bullish. And if we see that again, you're going to get a ride up. You don't want to trade against the trending system, because what you're trying to do is pick the market top. Now, a market top will be reached when a sequence of events, as Lauren has showed you, has appeared, but then you've got to wait for the trend to start changing. It means you've got to wait. Most traders don't like to wait. They want to get into the market. They don't want to sit on their hands. They don't want to be patient, and this is very common. It's why traders lose money, because they're not being patient. They're rushing in, and you know, one of the things I've learned: the better trades come when you're patient and you have reasons to take a trade. Now, a number of you here, just so you know, I can't see the questions, Lawrence. If you see any questions for me, I'm not going to be able to see them at the moment. Here's what I traded. I traded right, I almost picked the top of this market. Okay, now there's a reason I got this trade right this morning. And the reason was I was using a bigger time frame to identify serious resistance. I'd seen the volume spike here. Okay, now this is very dangerous. Most traders see massive volume coming in, especially on the small time frame, and say, oh, look, I remember that book that Gavin wrote. It said when you see high volume on up bars, I need to go short there. But I didn't say that in my book. I've always said you wait for the diamonds to turn red. Now, I was able today to actually not break a rule, but actually with Richard Seegers, who's a hedge fund manager, who actually said, he called the trade out. And he said, look, we have got serious resistance on a bigger time frame right up here. Now, the market had had a big move up anyway, and I didn't see any reason that it was going to go much further through this strong resistance level. So we saw here our second bout of volume. Now, if we notice this is a 5-minute chart, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, probably about 25 bars where the volume is pretty high. If we then say what's 5 times 25, if we go to a bigger time frame like an hourly chart, you're going to see that all the activity came within that hour. You see there? So all that volume came in. But we know as VSA experts, and you know, that weakness appears and selling appears on up bars. So we saw here at 7 a.m. this massive bar. At 8 a.m., as I started the seminar, I noticed the next bar had closed lower, which was interesting. So I'm thinking to myself, okay, if that's all buying volume, whoops, what's the sound? So just tell them. Sorry about that. The microphone just popped out for a second there. So if that's all buying volume on this good news, which potentially has come out, how on earth would the market do this? It closes lower, narrow spread. Now this bar is where I managed to take a trade, okay, in this bar, and I'll show you the entry. Because what we saw on the 4-hour chart, okay, here, massive volume, look, and it's right at what I call my trigger number. Now trigger numbers I've written about in my book, so I'm not going to explain all of those in detail, but I had something else that gave me some confidence. We had a trend cluster on the very next bar. Now trend clusters are unique to TradeGuider. They're very, very powerful. They work extremely well on the big time frames. When you see a trend cluster above you, it's basically the software program going back in time. It goes back about 2,000 bars, as much as the data as it can see, and it draws intersecting trend lines out into the future. You can't see the lines because it would make a mess of your chart if you could see them, but the computer sees it. And then what it does when it sees intersecting trend lines forming at a price level, especially if there's more than 5 of them, okay, and I've just revealed something that I haven't revealed before, then it will put up a cluster. Now, I had the benefit of seeing this bar fill at 6 a.m. And then this bar here, as the market came down and ticked below this bar, I thought to myself, you know something? It's beginning to look weak because the volume is now the highest that we've seen on this bar, the highest I've seen for absolute weeks. The news was bullish, so I know on good news professionals will take the opportunity to sell. We are definitely in a bigger downtrend. This is just a retracement. And actually, what really got me going about the trade when I took it was if we look at the Fibonacci level just here, look at where we're at, okay? Now, this is the sort of thing that you've got to see because my stop was right above the Fibonacci. In fact, I think it was initially at 81. And I was able, luckily, to catch the trade in here. Okay, so we saw here that the this bar here was the bar that caught the short trade. I still expect more downward movement, by the way. I still expect this to come back down. It will certainly retest. So I'm probably going to be trading this tomorrow morning with Steve Phillips in the live futures trading room. So here was the entry. Now we'll notice that we began to trend down, as we can see on the smaller time frames. And in fact, my entry was on the 5-minute chart. Now, if I go to 100 bars, you'll start to see why this makes sense. First of all, I've got a very serious level of resistance above me to price. I know that weakness appears on up bars. I'm in a live trading room. You know, it was with this morning with Richard Seegers, and Richard does not wait for the trend to change. He will look at support resistance numbers, and if he sees two or three signs of weakness, he will take the trades. Now, the safer trade for the day was actually there. That would have met my criteria from a VSA perspective. Keep doing that. If you read my book, that would have met the criteria to take a short trade down, and in fact it would have moved quite nicely. As you see, you had a secondary up thrust here in the middle of the day just before lunchtime, and it moved further down, and then it just went sideways. But absolutely tradable. There was money to be made there. But I actually took the trade right, in fact, on, I think it was this bar here, and it's all recorded, by the way, so you'll be able to go and see. It was a live trade. I was trading with my PFG account. I have two futures brokerage that I use, Infinity and PFG. And what I was looking for was I had a very tight stop in place on this trade because it was counter trend, no doubt about it. If I'd have tried to have shorted in here, I'd have been in trouble. But I did know there has to be supply in the market coming in. Now, what happened was, which was interesting, was as I shorted the no demand, we got this bar and these bars come in. Now that really, for me, confirmed that short trade was good because I was back into an area that we'd been sandwiched in for some time. And then all I'm looking is for the red bars in Trade Guider to come in. And here they are. They began to come in. The market moved sideways as the trade began to develop. Then I got my confirmation, so I got my up thrust. And then from there on, it just drifted down right to the round number. In fact, 5.700 was my target. And I started off with a tighter target when I took the trade, as you'll see in the recording. PFG are sending that recording out. I will also upload it to our server. And what happened was, once I'd actually seen these bars coming in, I was able then to bring the stop to break even, because it was only a 10-tick stop. It was a very tight stop. I usually use much wider stops. So in this instance, it was a very good trade. And again, you'll see the small, when we took the trade, Richard Seegers, who's a very good trader, will, and he does in his room, he takes counter-trend trades, even if the market's moving up. If it gets to a point of serious resistance on his chart, and remember, we have the luxury of knowing we're in a downtrend, and we've come right up to the 50% retracement level in the trend. We now have an opportunity there, which I took, and I think we'll get another one tomorrow morning. So don't forget to join me. We'll see if I'm hoping now that this market, and hope is not a good word, I'm expecting this market to go back up on no demand. And I'm going to be trading overnight. I'm going to be trading the London session on my own, so I'll be up at 1 o'clock in the morning, because that's when I think the move's going to happen. Once the market moves below the 50% level of this bar here, then we are going to see a steep decline in the British pound. I would, and this is great for me, I'm going back to England in a few weeks to be with Tom for Christmas, or for the Christmas celebration before. I'm not with him over Christmas, but I always spend a week with him just before the 18th of December, so I have that week with him, and I cook him a Christmas turkey, and we have we trade, obviously, and we're going to do some seminars. But what I was looking for this bar to come in because it fits it entirely within my trading setup. We've been in a strong downtrend. I know that the news is good. That probably means that when they said the banks are intervening, we haven't heard any more detail about that, but we know there are professional money there. We're extremely active. I've got resistance on the 4-hour chart in 3 different areas. I've got a previous area of a this is called what we call a 2-bar reversal at that level. Now the other thing, the reason I'm not in the trade at the moment, and I closed it, is I might see tomorrow an up thrust. That would be golden. If we had an up thrust into that area there, I will be short all over that. And that would be probably one of the best trades I've seen for many, many weeks. Okay. Yes, absolutely. Yes, yeah, the euro will follow the cable for sure. Both currencies are very highly interlinked. In fact, again, I may trade the euro tomorrow as well because I've seen some nice stuff setting up on the euro as well. It was a little bit more obvious, but it didn't move down like the pound did. So this is going to follow it tomorrow, very, very likely. Yes, we've got this massive volume spike here. This is, again, the euro did what the pound did. It moved down, but it didn't move down quite as much. I got a better trade out that pound, and that's why I didn't trade. Now, the Aussie dollar's looking interesting as well. Just go back to that because that was one I've been following as well. It's doing the same thing, but the Aussie has got an immediate test, right? It's immediately tested. Now, that could be bullish because that could be a prelude to an upthrust. So tonight at 7 or 8 o'clock, I'll be looking for a long trade here as long as the top of that bar gets taken out because we've got an immediate test of the supply. But you know something? I have to say there's just so much supply on that bar. And you can see the trend is down. It's broken out of its channel. What I want to know now, if this volume here on the Aussie is actually absorption volume, which would be bullish, then I would expect higher prices here. But at the moment, the good news is for all of us, the currencies are going to move next week. This next 2 days and next week, you've got probably the best opportunity that I have seen for months to make money in these markets if you're following the right principles. Because the currencies, I think, are easier to trade than the S&P is, mainly because they trend so nicely. And one of the things is if you're good with your risk management, and you're trading as Richard Seegers, who runs our Forex trading room, and Steve Phillips, who runs our Futures Live trading room. We trade live in those rooms every day. And, okay, I know that Steve doesn't take as many trades as Richard does. He's much more conservative, but that's absolutely fine. I prefer conservative traders because I know they're the ones that are going to stay in the game. Because what he's looking for is the very highest probability to actually go long or go short. And you'll see that tomorrow morning when we actually get together for the event. It starts at 7:55. We don't have a stock trading room, Darshak. I've just got my questions up. And the reason at the moment is I just haven't got anyone to do that. Okay, I can't do it. It's basically, I'm completely now committed with book promotions and all sorts of seminars that I'm doing. So that's something that we're looking at going into the new year. We'd like to do a stock trading room as well. So how do you sign up for tomorrow? Basically, we'll put a link in now. I'll just put a link in for tomorrow's live trading event for you. Just bear with me. I'll put it in the room and you should... can you see the links that were posted there earlier, by the way? Can everyone see those? Can you just see if everyone can see the links? I posted some links. Did they say yes? Oh, okay, all right. So I'll now post in the link to register for tomorrow's live trading room. Yeah, it is 7:50, December the 15th. No, that's not right. Hey, December the 15th. Hold on a second, everyone. We seem to have a discrepancy there, which I've just found out. Can you go and check with Army why that says December the 15th? Yeah, so I'm probably going to have to change the date on there. It looks like the... oh, just refresh. Okay. Just bear with me a sec. There it is. That's... okay, yeah, it's the same. Okay, let's just post this in the room here for you. Okay, can everyone see that? I've just posted a link in there. If you click on that now, before we, yeah, it should be December the 1st, not. It's going to be a very good December, people. Just so you know, if anyone's followed me, you know I'm ever the optimist. But at the moment, I'm seeing some really, really good stuff in the markets. Some of the best I've seen for many, many, many months. And that's because the volatility has been created by the professional side of the market. They're moving the market. They're setting up for something very big. I would not be surprised at all, as I say, to see the dollar strengthening, the US dollar, because everyone's saying it's weak. And of course, even all the experts are saying that the dollar was going to continue to rally, and it's not done that. It's done the opposite, and it's all in the charts. to put the screen back up now. Yeah, it's all in the charts. Okay, and finally, let me just give an overview of the, Scott's got a question here. Says, Tom's book talks about volume pushing up through resistance at the left being bullish. Could that be what is happening in the ES? I actually, you know something, on the ES, Scott, I'm a bit more bullish. The reason is, we'll finish off with that. Let's go to the daily chart. You know, the last indicator that we had in the Trade Guider program on the daily chart was just here. So we had a test. But I've been bullish because of this in the background. Okay, that has not disappeared, and I've been looking for a shakeout. Anyone in the VSA Club will know. And by the way, if you buy the software, you get a VSA Club membership as well now, included in that for 12 months. So that's something that Lauren didn't mention. But we do regular events in the club, and I've had to see what's going on here. This was massive volume on these two down bars. So there's a lot of buying power down here. This happened on bad news. The news was the downgrading of the US credit rating, and everyone expected the market to crumble. But in fact, we see evidence all along here of strength coming in on these bars, and then we see the market begin to change trend. Now, we're in a trading range at the moment. This is a trading range as defined by Wyckoff. Wyckoff talked about the phases of accumulation and distribution. So we're in a phase, okay? Now, we've come back down into this area a few days ago, and now we've pushed up today, and the volume doesn't look massively excessive, although I do expect a retracement tomorrow. We could even see a retest of 1200. There's a lot of supply there, but if we see no supply tomorrow, meaning we have a low volume down day, then we can expect higher prices on the S&P, possibly up to 1400. That's really where the market wants to go. It's being drawn up here. You've got a lot of resistance at 1260, so that's where the next resistance level is going to be. We tried to get through it once and failed miserably. We tried again and failed miserably. So it's going back up there. But this time it's going back up on a healthy increase in volume, not an unhealthy increase in volume. But I would caution everybody who's trading tomorrow. We do have supply on these bars. There's a lot of supply around on the end of the day. So I will certainly be looking tomorrow morning initially at shorts, as long as the market trends are down overnight in the Globex. So there could be some good opportunities to, because there's almost no doubt in my mind they're going to come and retest the low of that bar, which is just here, and that's the low is 1234. So a 10-point move down overnight is very, very likely. If you're going to trade the Globex, that's where I'd expect it to go. And then we're going to look very, very closely at the bottom of this bar tomorrow morning as we set up the trade. That's going to be a very key area at around 1235. The Globex is the overnight session. The E-mini is trading right now. It's called the Globex session. It trades overnight. It trades in the Asian session, the European session, so it's trading pretty much 24 hours a day. They do settlement at 3:15, but basically the Globex, the E-mini, is open for business for trading, and you do get, you've seen recently overnight a lot of movement in the London session. So it's the E-minis are very tradable at the moment in the nighttime session. Steve Phillips actually leaves the room open, the trading room open now overnight, because there's a lot of opportunities there to be taken. And same with Richard Seegers. He actually takes a lot of his trades in the Globex sessions. The main sessions that I like to trade for the currencies, between 7 p.m. and 9 p.m. Chicago time, I trade the Aussie dollar and sometimes the yen. After that, going into midnight in Chicago time, I'm going to start to look at the British pound versus the US dollar and possibly the euro. And I also, if there's anything setting up, will trade the Canadian dollar as well as we come into the open of the US. So that means my trading session will be about 10 hours if I do an overnighter. Well, I call it a ghoster. And I don't do too many of them at the moment, but next week I will be doing ghosters because there's too many opportunities here. They're just, you know, I've seen the highest volume I've seen has come into these markets now. So the big players are very, very active. And I honestly think that, well, certainly next week we've got some great opportunities in the market. And funnily enough, the following week I'm doing a mentorship session. I think there's still a couple of places left, but so those of you that signed up, I'm looking forward to connecting with you. The question came in about that. We do it in GoToMeeting, so you actually talk to Marcus and I as we're trading live. So we've got 3 days of practical teaching where we actually give you the practicalities. Marcus is going to show you his 3 best setups. I'll show you mine that back up Marcus's. and then we'll trade them live on the Thursday and the Friday. It's the best way to learn, in my opinion. The feedback we've had from the other mentorship attendees has been superb, and what it enables you to do is ask questions rather than typing into a window. You're actually connecting with other traders because you can hear everybody else talking and commenting, and it's amazing how, you know, when you get a group of traders together, one person will think of going long for one reason, another one will want to go short, and then everyone dissects it down into what the market's going to do. And I have to congratulate the Australian mentees. They're the only group so far that have actually been into the live market, and they made $900. It was fictitious money. They were trading on a simulator, but they made the right trade. And unfortunately, because Tom was in hospital, we had to postpone the session for the Europeans and for the US attendees. But if you're listening, we are doing that on the 15th of November while I'm with Tom. We're going to email you out the details, so you haven't been forgotten. We are doing that. It's just that, as you all know, I think Tom was in hospital. Tom Williams was in hospital and wasn't well, and unfortunately, you know, he couldn't do any trading or anything. But he's getting much better. I'm pleased to say the reports are good from Tom, so that's great. Yeah, Nick's saying Squire Holmes, very nice, very Squire. Yeah, sorry, hello Squire. Is there any thoughts of combining VSA with Marcus's setups? We already do that when Marcus and I trade together. It's interesting that Marcus has a setup which works very well, in my opinion, in a sideways moving market. It's called a Seahawk strategy. He actually used that. Marcus beat me in the last competition, and unfortunately, if I now look back, if I hadn't entered that last trade, I probably would have been okay. But when we look back in hindsight, it's a wonderful thing. But you've got to make a trade, and that's the whole thing about competition. But we are going to be doing a live competition again in January. I thoroughly enjoy them. At the moment, it's one each. I pipped Marcus at the post last time, and that's what I love about trading. You know, it's a great business to be in. But you know, something you've got to take small losses. I think when I was beaten by Colin in the last session, you know, it's taking that small loss and saying, okay, I'm in a competition. I'm not going to blow my account up. And great thing is, because I've been able to make that back very, very quickly, small losses you can make back. It's when you take the big $3,000, $4,000, $5,000 losses, or you blow your account out, you lose your confidence and you lose your faith, and that's important. Okay, so let me just see if there's any other questions. What's the link to the mentorship? I don't actually. Do you know if we've got any places left? I'm not even sure that we have, because I think when I last looked. Let me go and just check. I'm just going to find out something. Let me leave you back with Lauren for a second. Actually, if you email Lauren, yeah, email Lauren. In fact, I'm sure we had a link for it. Let me just find out. Bear with me a second, everybody. I'll just find out. I'm going to switch my chart off for a second. You can always email Lauren if you're interested in coming on that. I believe I'm told there is 2 places left. Okay, there is on the session. It happens to not next week, the following week, which I think is going to be very, very active as well. I think we're going to get lots of activity. So let me just find out where it. 12th to the 16th of December is when it is. Yeah, and it's in the middle of the trading day. We're going to do it from midday through till 3 p.m. Chicago time. So I think that works for wherever you are in the world for most people, because we didn't want to make it too late. Oh yeah, hold on, I found it. I think here it is. There it is. There it is. I knew I had it. Okay, I'll just put the link up in the room. This will just tell you what we're going to teach. It just shows you what it is going to be in the live market. Just so you know, it's the first 3 sessions are going to be practical. So we're going to be actually giving you trade setups. But then on the Thursday and the Friday, we're going to be in there live, trading our live accounts, and you'll be able to trade along with us. If you're using a simulator, I'd recommend you do, just because you're learning. There's the detail. I've just put the link in there. There's the web page. And Marcus and I have done stuff. We actually did an event at the CME a couple of years ago, had 50 traders there with us live, and it was a really, really very successful event. A lot of friends were made and a lot of connections made at that event. And I believe truly that one of the best ways to learn is learn strategies that complement each other. And the reason I work with Marcus is his strategy very much complements VSA. It is based on technical analysis, let me be clear. You know, a lot of people have said that I knock technical analysis. I don't do that at all, and I really don't want you to think that's the case. I believe that there are strategies that work. Marcus has the boomerang and the ping pong, and again, these are just quick pullback trades. But you can't argue. Marcus, every time he's traded in the competition, or I knocked him out the first time, but he made money. He was one of the few traders that got knocked out and made money. But he's a very good trader, and and the timings that we're going to change that. This is going to be now midday till 3 o'clock Chicago time. Okay, and apparently we are still ordering the special price. It's 3 hours each day, not 2 hours, just so you know. It's now 3 hours. In fact, I think Richard may have actually, yeah, he's going to correct that. Alrighty, okay, everyone. Let's just see if there's any questions. Bill, I'm not sure if we're going to be doing another one until second part of the year next year, just purely because we've got so many commitments in January, February, March. I'm coming to Australia. We're going to Malaysia in the first, it's probably going to be February, March time. We're planning that at the moment. So there's a lot going on there. So that's why we're doing that. It's 15. We're going to take 15 traders in this because we know that works. That's the maximum. And then what you do, you must have a microphone. You must have a headset. And then what we'll do is we'll come in at the first session. We introduce you all to each other. So you're going to make a load of friends. I know people have done that. Certainly out in Australia, connections have been made. And it's great. And that's one of the reasons I want to do this more and more. Next year, second part of the year, we'll probably be doing these once a month. But for the moment, we're going to do this in December. We think it's a great opportunity because the markets are going to be more active than they've ever been. And for me, I think what a great way to trade when the volume is at its peak. What a way to teach people as we see the markets really beginning to move. And I would suggest to you that the next 2 to 3 weeks is going to be probably some of the best opportunities that we've seen for a long, long time. And I see opportunities every day, but I think we're going to see a really big move. And something, if we can get on the right side of that, then there's money to be made. All right, I'm going to hand you back to Lauren. Well done, Lauren. Great job. Thanks, everybody. God bless. Have a really good day. And I shall see you tomorrow for the live trading session with Steve Phillips. Thanks, everyone. Bye-bye.
Well, thanks very much, Gavin, and thank all of you for sticking around for a really great episode of the ABCs of VSA. As always, if you have any questions, comments, concerns, anything at all, just email me or call me or Skype me. Always available and happy to help. All right, thanks so much and have a great day. Bye.